Hi, it's October 2nd, and we're going to look at something new as well as our usual charts for today's trade of the day. What we're going to look at specifically is going to be a fairly simple chart with old-fashioned, so to speak, indicators. Uh, I think the idea here is to see when you can and when you can't use pretty standard methods to come up with good results. Okay, today, as I mentioned a few times this week, was the major employment report for the month, which was likely to create all sorts of problems or all sorts of activity, which it did. Guess when it guess when the report released. Yeah, that would be right. Okay, so the report goes up, comes down a little bit and gives us a spot that's other than this, then goes up for another wave up, comes down, and now we get to start drawing lines. Isn't that fun? All right, here's the tight trend line going up. Prices come down, go up a little bit. Now's the time to draw this trend line through here. This black trend line is drawn across the three tops here. You can see it again over here. Goes through here. This white line is part of the measuring device that many packages have in them. So in any case, this black line is the top line, and an interesting thing occurs here, and it's not specific to any chart set, which is that the first time this line gets touched and actually gets penetrated by a tick, uh, the risk-reward ratio is quite poor. Then if you wait for a while, the risk-reward ratio gets much better, and at this point, which is, in my opinion, the ideal point, it's the best it's going to get, which is about 3 points of win for 1 point of risk, whereas over here you can lose one to gain one. Over here, you can follow out the wedge or triangle, however you'd like to name it, and you can find the same point. To do so, you just have to kind of wait until it gets there. And over here, uh, this is this first point that sets up the triangle. I don't have the triangle drawn in here. And then we go up and we come down. This arrow here says sell if it goes below this low, which it doesn't. And so you stay put, and this is a confusion bar. Buy if it goes up, buy if it goes up, buy if it goes up. And finally we get to a bar which is okay, whatever you think. And that has to be in a context. And the context here is we've had things go up and now maybe we're going to go down. Looking down here, this certainly isn't too hard to see is not headed up. Let's look at our other oscillator, one that we don't, it's done a bit differently and we don't look at it very often, but it's going down, it's going down. And at this general area, here's that area in just the plain old vanilla chart. There's nothing intrinsically wrong with plain old vanilla charts. All right, so we start here. We know we're probably going down. We've already gone below the moving average here, right? And here it says, yeah, we're probably going down. So you're not thinking seriously about going up here, presumably. And then we rally and we come back down here. Now you might get short here, and it's only going to be maybe 1 tick difference. It's not a big deal. And that's the same as this guy here, which is the same as this guy, which over here has a get long if you can arrow on it, which we kind of ignore because we're out of getting along territory. And so that makes us get short. This is the bar that's the setup, the proper setup bar. So we'd get short on this bar right here, the red bar with the arrow above it that says, oh yeah, you really wanted to go down here, didn't you? Well, you don't get any of that over here, but you certainly get your little short. You might get short here, as I said. That's just not a big enough deal to worry about. And then over, things just kind of go on down. These are your measuring things. This is, I think I've got this set for 50%. This is 100%, and it's actually slightly below the way I have done it. It's slightly below where this gets to. Hopefully, as this sits down here, you'd figure out to get out of it. I've done this one for no obvious reason, or none that are to me obvious. This over here is the same kind of thing. This over here is a couple of ticks higher, and you'd certainly be getting out there. And over here, we see we have the prior day's high, and that's not a big deal. You may be able to get that on any or all packages. And this is pretty much the same place and space that the target line is. And you know me, I'm chicken, so we hit that and I'm gone. And if there's any doubt in your mind on this arrow down, this down bar, which is this guy here, which is also this guy here, you get an up arrow, and now you kind of should be worried. I mean, you should have been worried before now, but okay. You're not getting a whole lot of help for getting out up here. I mean, this is kind of a, oops, we got problems. Well, you don't. Oops, you got problems. Well, maybe not. Oops, you got problems, and this time you do. This is the standard RSI, and it's with a 3-period lag on it. And the numbers that are chosen there are just the default numbers on this software package. If you look over here, this has been going down. Well, here you get an up. This is, it's not exactly on time, but it's on time enough that even though this is the bottom, and this actually goes up, so you can get out here, which is the same level. And the same thing, I believe, is true here, isn't it? It's called get out here, and yeah, you can get out to the green bar. You get a couple more chances to get out along the green crosses here. So you get a little bit more help from what we've got, from what our package is in terms of getting out, and you get these arrows and whatnot. But you can get the same trade with just standard sorts of approaches. Why you'd want to use an RSI, I mostly don't know, but that's me. All right. Any way you slice it, you got pretty good risk-reward ratio. So I said about 3 to 1, and that's about a 24-tick profit, or 23 along in there which is goodness. That's $690 to $700 or $720. So that's a pretty good day, and I suppose you could have bought here and ridden this up if you had lots of confidence, or you could just kind of wait and be stupid like me and take the easy money. All right, that's it for today. We will see you on Monday the 5th.